Good afternoon, everyone. You're very welcome to the Sherry Fitzgerald First Time Buyer webinar. My name is Shane Quinlan, Managing Director of Sherry Fitzgerald Mortgages, and I'm delighted to be your MC today. This is the fifth in a series of First Time Buyer webinars that we have hosted over the last 12 months. I hope you got to join our previous webinars and found them informative. The focus of today's webinar is on three important topics relevant to you as a first-time buyer. I will kick off with an update on what's happening in the mortgage market. I'm delighted to be joined by my colleagues, Gemma Moore, Associate Director in Sherry Fitzgerald New Homes, who will give an overview of the supports available to first-time buyers looking to purchase a new home. I'm also joined by Sandra Darcy, a Director in our residential business in Drumcondra, who will talk about the Vacant Property Refurbishment Scheme. Gemma and Sandra, you're both very welcome, and we look forward to your presentations.
Thanks, Shane.
Before we get into the presentations, just a couple of housekeeping items. Before we get started, the webinar is due to finish about 1:40. We know everybody is busy, so we'll move through the presentations quite quickly and cover them in about 25 minutes, just to leave sufficient time at the end for panel discussion and Q&A. We have received a lot of excellent questions during registration. Some of those will be covered off in the three presentations, but some of them we've held back, and I'll put them to Gemma and Sandra in the panel discussion. Please pop any questions you have into the Q&A box at the end of the screen. I'll try my best to cover as many as possible when we get to the panel discussion later in the webinar. And just to let you know that the webinar is being recorded and it will be sent out to everybody that registered. We'll also share a number of useful links as we go through the slides. So what I would say is get your phones ready, be ready to take a screenshot. So we will start with what's happening in the mortgage market. So maybe we might just move on to the next slide, Connor. And what I'm going to cover today, maybe just the next one again. What I'm going to cover today is just a bit in terms of what's happening from a mortgage lending perspective in Ireland, talk a bit about the competitive landscape in terms of the lenders that are active in the market. A lot of focus in recent times in terms of mortgage rates. So I'm just going to cover off what's happening there. And I'll just finish off at a high level in terms of the kind of key considerations in terms of getting mortgage ready. It's fair to say that the last 3 years has been pretty transformational in terms of the mortgage market when you compare it to the previous 10 years. We have seen a number of lenders, mortgage lenders that have left the market. We've seen record levels of demand for mortgage finance. We have seen big changes to mortgage interest rates, particularly in the last 18 months. And we've seen a big shift of mortgage customers moving towards brokers for their mortgages rather than with their primary bank. I think if we look at mortgage lending in recent years, just moving on to the next slide, 2022 was very much the highest year for new lending going back as far as 2006, with over 14 billion in mortgage drawdowns. First-time buyers made up 50% of that new lending and 25% switchers as existing customers moved to lock into low rates before interest rates changed in the second half of 2022. As you can see from the graph, that strong demand for mortgage credit continued into 2023. Switcher activity did drop off as the rates increased, but first-time buyer demand continued to be particularly strong and was over 60% of new lending in 2023. And this trend has very much continued into the first quarter of 2024. If we look at the lender landscape on the next slide, we have seen significant changes, as I said, in the last 2 or 3 years. We have seen the exit of KBC and Ulster Bank, who traditionally made up 25% of new mortgage lending prior to their departure from the market over the last 18 months. What we have seen in the last 18 months is the primary lenders, as you see in the middle of the slide, Bank of Ireland, AIB, Permanent TSB and Vacant have made up 90% of the mortgage lending in the market last year. There is 2 non-bank lenders, ICS Mortgages and Finance Ireland, who have been in the market for a number of years, but they did have a lower lending levels in 2023, but are expected to return and be more active in the market this year. There's also a number of new lenders that are entering the market. Moco, who are owned by the third biggest bank in Austria, launched into the market with a number of brokers in November of last year and are starting to do a lot more lending in the market. New money are expected to launch into the market over the summer. And obviously the credit unions have clearly communicated their ambition to do a lot more in terms of mortgage lending. So it's been an interesting landscape over the last 18 months with the exit of two large lending institutions and the emergence of some smaller players to compete with the primary lenders. If we focus on rates on the next slide, again, we saw a big change in 2023 with the increase in interest rates charged on mortgages and the increase in borrowing costs for mortgage customers. The banks source a lot of their funding from the European Central Bank, and they increased their lending rate 10 times from July 2022 to September of last year to control inflation growth across the EU. Lenders moved to pass on most of those increases. And if you can see in the next slide that the average rate for mortgage customers in Ireland at the moment, and this is a graph taken from March of this year, is just over 4%. So as you can see, we're above the EU average and very much towards the kind of higher end in terms of average rates that are taken for home purchase in Ireland at the moment. The good news, just flicking on to into the next slide, is very much that inflation has come under control, and the European Central Bank have indicated that they will start to reduce rates from June. It has been signaled that a 0.25% decrease in rates is expected when the ECB meets on the 6th of June. Further cuts are expected. It's a bit uncertain in terms of when they will come, whether it'll be the second half of the year or more into 2025. But the good news for mortgage customers is that the trend is downward. Even better news is that the main lenders in the market have got ahead of the ECB cut and announced a reduction in rates in the last couple of weeks. So Bank of Ireland, Permanent TSB, AIB and Vacant have all reduced their rates in the last 4 to 8 weeks. And the best rates in the market are now closer to the 3.5% when compared to the 4% that we would have seen in the first quarter. And obviously with more lenders entering the market, price competition is heating up. This is good news for first-time buyers that are taking out their first mortgage. In terms of getting mortgage ready, you know, one of the webinars that we done last year, we focused very much on the key elements and considerations of getting mortgage ready. We do have a recording of that webinar. We will share it on the next slide if you want to take a screenshot, so you can go back and have a look at that. Maybe just going back to the previous slide, Connor, just want to summarize probably 4 key questions that are very relevant to consider when getting ready to apply for a mortgage. The first one is very much, how much can I borrow? And there's a number of I suppose considerations or things to consider here. The level of income obviously is something that is key here. What percentage of our income is fixed versus variable? A first-time buyer can typically borrow 4 times their income based on the central bank macroprudential rules. Age and the term of the mortgage is also a key factor that's considered in terms of how much you can borrow, as well as your outgoings and other loan commitments. So obviously, you need to consider, can you afford to pay off your mortgage as well as service the other loan commitments that you have, and you know, the lifestyle and the outgoings that you kind of have on an ongoing basis. What do I need to qualify? You know, typically first-time buyer requires 10% of the purchase price of the home. Track record of savings to put towards a deposit is something that's key there, as well as the ability to cover the costs of purchasing a property. So when you buy a property, obviously there is legal costs involved. You do have to get your house valued. There is the cost of furnishing. So all of that is an important consideration when looking to qualify for a mortgage. What's important for the lender? There's a couple of key things that are very much key when the lenders are assessing mortgage applications. One of the key ones is obviously the ability to repay your mortgage based on your incomings and your outgoings. Having a good clean credit history is also something that is considered when the lenders are assessing applications. And there's a number of key documents that a borrower has to provide when they're going through an application, such as bank statements and income statements that have to be provided to the lender to give them a picture of the applicant's financial health. And where do I borrow? Well, you do have a number of options. First-time buyers can go directly to their primary bank. However, by doing that, you are limiting yourself to the offering and the rates that are provided by that lender. Some lenders are better for first-time buyers. So a number of lenders offer cashback, a percentage back in terms of the based on the value that you borrow. Some lenders offer discounted rates for purchasers or for borrowers that are purchasing A and B rated energy efficient houses as well. So what I would say is, where do I borrow? Brokers do research the best options for first-time buyers in the market, and there has been a movement more towards brokers in recent years, as I suppose the rate environment has become a bit more complex, and lenders are offering new features around green rates, discounted rates, high value mortgages and stuff like that. So there is a movement more towards broker. Sherry Fitzgerald Mortgages would be delighted to help you. We do have contact details on the next slide, Connor, if you want to put that up. So here you can see some helpful links. If you have your phone, I'd say get a screenshot of it. But we will send it out to all those that have registered after the webinar as well. So things like the calculator, there's the Getting Mortgage Ready webinar that I referenced from last year that you can watch back. You can book an appointment to chat with a mortgage broker, apply online directly if you're ready to proceed, or you can speak to us by phone and the number on the slide there. So that's an overview in terms of what's happening in the mortgage market. I'm going to hand over now to Gemma, who's going to give the audience an overview in terms of the supports that are available for first-time buyers in the market. Gemma, you're very welcome.
Perfect. Thanks, Shane, and good afternoon, and thanks again for joining us this morning. So I'm going to talk about two very good schemes that are currently in play for first-time buyers. So the Help to Buy scheme and the First Home scheme. You can look at these both as the Help to Buy scheme is essentially your deposit scheme, and the First Home scheme, you can look at that as your mortgage scheme. I'm going to touch off other schemes as well currently in play, and then give a very high level view of new homes currently that we have available nationwide. So if you want to just flick on there, please. So the Help to Buy scheme, as I said, you can look at it as your deposit scheme. So it's a government-backed scheme which is designed to assist first-time buyers with their deposit. So it was recently extended until the end of December 2025. And the positive news is the current government is currently talking about the extension of this and also the First Home scheme, which I'm going to talk about for another 5 years. So how do you qualify for this scheme? So you're a first-time buyer or you're self-building your first home. So the property that you're purchasing or self-building is a new build and has a value of 500,000 or less. So when I talk about the First Home scheme, you'll see that it's capped as per region, whereas the Help to Buy scheme is just a flat 500,000 or less. So you must take out your mortgage on the property with a qualifying lender, and the loan must be 70% of either the purchase value or 70% of the approved valuation if it is if you're self-building. So how much can you claim? So the way this is calculated, it's based on how much tax you paid over the past 4 years. And this is income tax and also your deposit interest retention tax, so your DIRT tax. And the claim is made on the lesser amount of, so you're either entitled to a maximum of €30,000 or 10% of the purchase value of a new home or 10% of the approved valuation of the property if it is a self-build. So if you just want to go on there, please. So you apply simply through revenue.ie, or else you can do it online on www.ros.ie. We do get a lot of questions, and we had a lot of questions in as to, I suppose, you have your Help to Buy and what are the next steps. So with new builds, there's 3 stages with your Help to Buy. So the first is your application stage. So this is when you log on to the Revenue. You'll get an application number, you'll get an access code, it will confirm your claim amount and also the expiry date. So the next stage is the claim stage. So this is when you have found your property, which is 500,000 or under, you put your booking deposit down, you have signed a contract, the developer has signed a contract, and your mortgage has moved through to loan offer. At this point, you will then receive a claim reference number. This claim reference number is then provided to the developer or the qualifying contractor, and this is where they claim the Help to Buy deposit. So just next there, please. So the next scheme I'm going to talk about is the first home scheme, or you might know it as a shared equity scheme. This is one that you can look at as the mortgage scheme. So what is it? It's essentially the finance that you have versus the finance that you need. So this one is a financial support to as well as a help to buy, build, or buy your first home. So again, it's a government-led scheme. It works with participating bank lenders, and it basically finances or bridges the gap of up to 30% of your home. So the first home scheme and the help to buy scheme, they are separate schemes, but you can use them together. If you decide to use them together, so the help to buy will help you for your deposit, then you're entitled to 20%, up to 20% with the first home scheme. Essentially what happens is the first home scheme will have a percentage ownership of your property, and you can buy this back at any time or stage, but it is optional. So how do you qualify for this one? So again, you're a first-time buyer, you're self-building your first home. So this one also opens up if you are renting and your landlord chooses to sell, you may be eligible to purchase that home with the first home scheme. You have not previously bought or built a property to live in, you do not own or have an interest in any property in Ireland or abroad. The first home scheme also opens up something called the fresh start. So if you previously owned a home, but you no longer have financial interest in it, so you're divorced, separated, your relationship ended, or you're bankrupt, you are eligible for the first home scheme too. As I said, there is regional price ceilings. So if you just click on that link or take a photograph, it will let you know. For example, in Wicklow, the ceiling is 475,000 of the property price. So with help to buy, it's 500,000 cap, but whereas with first home scheme, it's regional. So if you just want to go on there, please. So how much can you claim? So you must borrow the maximum amount from one of these lenders. So Bank of Ireland, Permanent TSB, and Allied Irish Bank, which includes AIB, Haven Mortgages, and EBS. So you must have a 10% deposit or 10% of the purchase price or the bill cost. And as I said, you can use the help to buy with this scheme. So you can borrow up to 30% of the market value of your new build, but the minimum that you have to take is 2.5% or €10,000. And again, that's a very useful link there. So it's your eligibility calculator. So if you want to save that as well. So how does it work? So for the first 5 years, there's no charge that you own your new home. So if you haven't bought out the first home scheme by the 6th year, then a service charge will apply. So there's 3 important things to remember here. So the service charge it's fixed rate for life, which is good. It can either be a monthly or annual payment, and it's on the first home scheme amount only. So essentially, once you get to 6 to 15 years, it's 1.75%. From 16 to 29, it's 2.15, and 30 and over, it's 2.85%. So applying for this one, again, it's fairly straightforward. If you go on the firsthomescheme.ie, and one of the main things that you will need here to move forward with the application is your approval in principle. There's also other schemes in play at the moment. So the Land Development Agency and the local authority, they have different versions of this. So essentially new homes under the schemes area with the greatest housing needs, where affordability can be an issue, the local authority will take a percentage stake in your home, which is essentially similar to the first home scheme. Other schemes available at the moment is cost rental and local authority equity loans. So you want to just move on there, please? So here you can see an example of the first home scheme and the price caps. So you can see there in kind of Cork, 500,000, 475 in Wicklow. This is available on Sherry Fitzgerald website, so you can have a look at it at any stage. If you are ever unsure or you have questions, just contact us directly and we can help you with that. So just next there, please. So this is just a sort of snapshot of, I suppose, new homes that we have available. The very handy calculator. So if you go to Sherry Fitzgerald mortgage calculator, I'll do this with you now, but essentially, for example, in Cherry Lane, we have 2-bedroom new build duplexes. They're 500,000 and they qualify for help to buy. So if you're using the mortgage calculator, if you basically, are you a first time buyer? Yes. Is it a new build? Yes. Are you using the first home scheme? No. Help to Buy scheme, yes, and then just put in calculate, you put in the property price and then calculate. It's going to let you know how much deposit you need, how much Help to Buy you can qualify or you could qualify for, your deposit and your household salary required. So if you just want to go on there again. So we also have 3 beds coming up which are qualified for Help to Buy in Mere Park. So we'll be launching that next weekend. So we'll have 3 beds from 480. We also have 2-bed homes coming on that will qualify for First Home Scheme in future phases as well, which is good. And just next there. So we also have examples, as I said, nationwide. So in Cork, we have Lakeview there. So 3 beds from 370. So they qualify for Help to Buy in First Home Scheme. It's worth to note as well. So once you click yes to the First Home Scheme, it's going to ask you your county council in this calculator. So once you pop in which council, so obviously here it's Cork. If you go over the cap there, this calculator will let you know that it's not the case. But as I said, you can call us at any stage for help with that. And just next. So again, in Green Gates, we have 1-bed apartments. So they're currently qualifying for Help to Buy in First Home Scheme as well. So they're from 425. And then the next slide. So Ballymckenny will be launching next week as well. So they'll have some 3 beds there, also qualifying for Help to Buy in First Home Scheme as well. And then just next. And then finally in Galway as well. So we have 2 beds there from 355, also qualifying for both of the schemes. And this next, please. So then here's some helpful links. That's the First Home Scheme webinar. That's the last time with Michael Broderick from the First Home Scheme. So that's one to watch again. We have the First Time Buyer Hub, Sherry Fitz. Then they're all the links that we've talked about. And then the important one I would definitely save is the mortgage calculator. I know there's a lot of information here in both of these schemes, but at any stage you can call through to the First Time Buyer Help Desk, and Nicole and Leah are on hand if you have any questions at all on either of those schemes or any of the developments that we have. And that's it.
Gemma, thank you very much for that.
No problem.
A lot of questions coming in. We've over 20 questions in the Q&A box already, and I know we did get quite a few in during the registration as well. I know you've covered off a lot of them, Gemma, but there's 1 or 2 here just before we move on to the next presentations. Question around what's the process for new builds selling from plans with a completion date 6 months into the future? What's the process there around contracts and the mortgage and stuff like that?
Yeah, perfect. So generally when you go to buy a new build, you're either buying from plans or from a show house. When you do put your deposit down, it's normally 6 months, possibly to 9 months before your house is ready. So when you go and put your deposit down, you're more than likely looking at a show house. You'll put down a booking deposit, which can be between say 5,000 and 10,000 euro, which is refundable until contracts are signed. You will need a solicitor in place as well, and you will need your mortgage approval in place as well. And then you would sign contracts in about 21 to 28 days from when your solicitor receives them, but you are looking at a lead-in time of a minimum of 6 months.
Okay, very good. If you're buying a new build in phases, do you need mortgage approval before placing the deposit?
Yes, you do need mortgage approval. So in order for us to reserve a house with you at the launch, we would need your mortgage approval in place at that stage.
Okay, very good. There's a couple of people asking questions, people that have kind of moved back recently from abroad.
Yeah.
One person kind of back after 9 years, but they've been working in the country since January. How long do they need to be paying tax before they can access the Help to Buy?
So it's done, it's looked back from the past 4 years. So you're best to log in and it can calculate it for you. But you do need to be kind of paying tax for the previous 4 years in the country to qualify.
In Ireland, okay. So it's ros.ie, is it,
Yes.
to get that
Yeah.
relevant information? Great. Gemma, thanks very much for that. We come back to the panel discussion. I'm going to move on now to Sandra. Sandra, you're going to update us just in terms of the vacant property refurb scheme. So over to yourself.
Great, thanks, Shane. So yeah, as Shane said, I'm just going to go through an overview of the vacant property grant. So this was introduced in Ireland to encourage the purchase and the reuse of vacant or derelict houses. It provides a financial assist to homeowners or people who are looking to buy and refurbish these properties to make them more suitable to actually live in. So the grant can actually cover a significant portion of renovation costs, which makes it an attractive option for those who are looking to restore and occupy previously unused homes. Interested parties need to apply to their local authority to determine if their application qualifies and to confirm potential funding that they can receive. I think we might be able to pop on to the next slide there. So this grant can provide up to about 50,000 for refurbishing vacant properties and up to 70,000 for a property that is derelict. The grant can cover works such as roof repair, damp proofing, windows and internal works. A more detailed list of this can actually be found on Citizen Information website. So to qualify for the grant, you must meet the following criteria. So the property must be vacant for at least 2 years. The property must have been built before 2008. You must own the property or be in the process of buying it. You must live in the property as your main primary residence or make it available to rent once the work is carried out. You must also provide a tax clearance cert. The LPT for the property must be up to date. So that's the local property tax. And you must not be a registered company or developer. So to apply for the scheme, you will need to complete an application form and submit it to your local authority, which you'll have to, add in some supporting documents as well. The form can be found on citizeninformation.ie or gov.ie. So step 1, you need to prove that the property has been vacant for at least 2 years. Proof that you are the owner of the property or in the process of buying it. Proof that the property is derelict if you're applying for the top-up grant. A quote for the works to be carried out. Proof of planning permission if needed. Applicants also must agree to the clawback condition. So if you sell the property within 5 years of the works being carried out, the full amount of the grant will be clawed back. If the property is sold after 5 years or less than 10 years, then 75% of the grant will have to be repaid. Or if you sell the property after 10 years, then there is no clawback. If the property is going to be rented, you must also sign a declaration that the works will meet a minimum standard for rental accommodation. If the property is also going to be rented, you need to sign an affidavit that you've not received a grant for this refurbishment or for the refurbishment of a rental property before. Step 2, so your application will be reviewed by your local authority and further information may be required. The local authority will arrange for a qualified person to visit the house and check that it is possible to do the work required and also assess the cost. If your application is successful, you'll then receive a letter of approval from the local authority outlining how much your grant will be. If you're in the process of purchasing the house, you will receive a letter of approval in principle. Works must also be carried out within 13 months of receiving approval. So step 3, you need to submit information about your contractor, send in your own bank account details, send invoices for completed work, get a tax clearance cert from revenue if the grant is for over €10,000. Then step 4, so the local authority will arrange for the property to be checked and confirm that all works outlined in the original quote are completed. If the local authority are happy, they will sign a charge document. So this document gives the local authority rights over the property. This is to ensure that you do meet the clawback condition. So then step 5, so once the local authority confirm that they are happy with all works carried out and the charge document is signed, this is when the grant is paid. So that's all the steps that you need to follow. Like through my own branch in Drumcondra, many of our buyers have actually used the vacant home grant scheme. So usually what happens when we're instructed to sell a property that is vacant, we will always ask the current owners how long the property has been vacant for. So if it is vacant for over 2 years, then we will inform potential buyers. So then when buyers do actually go sale agreed on the property, through their solicitor, they would request utility bills from the current owners. So these utility bills can prove or can be used as evidence that the property has been vacant for 2 years. In some other cases, current owners have supplied affidavits confirming that the house has been vacant. But I've certainly found in my area, though, for different reasons, houses have been left vacant. And I think this grant is a great financial assistance to buyers, and it certainly encourages buyers to look at purchasing older homes as well. So that's my little update.
Great, Sandra. Thanks very much for that. Conor, you might just go back one slide just to leave the helpful supports
Oh, sorry.
up on the screen, the helpful tips. Yeah, Sandra, we have a couple of questions in terms of kind of the definition of a vacant property. I think you kind of referred to it there. If you're a buyer and you're looking to prove that the house is vacant, but you don't have evidence from the seller, how is that kind of considered?
Okay, so in that scenario, what usually happens when you're going through the sale process, once the sale actually closes, you will receive an MPRN number to set up your electricity account. So you could actually use the MPRN number to go back to a provider, and they would be able to provide evidence that there is that there's been low usage in the house for the previous 2 years. So that's one way of looking at it.
Okay, and if I suppose the definition of derelict versus vacant, then how do you prove a property is derelict?
Oh, okay. So for a derelict property, then that's a little bit different. So you have to get an engineer in or a surveyor in to inspect the property, and then they'll have to submit a report to confirm that the property is actually structurally unsafe and unsound. So that would kind of be the difference. So for vacant, it's obviously just empty for 2 years, nobody's living in it, but derelict is nobody can live in it. It's unsafe.
Okay, very good. We're up to 35 questions there in the Q&A. I've covered off some of them. Sandra and Gemma, you might just take a quick breather before I come back to you for the panel discussion. Quite a lot of questions coming in related to the mortgage process. I'm just going to do a kind of a rapid fire here. Do married couples need to have a joint bank account when applying for a mortgage? No, that is not a requirement. However, it is beneficial for couples to have one account to service their mortgage. And actually some banks do incentivize that. There is some banks that will give you cash back on your monthly mortgage payments if you do open a current account as part of the mortgage process. Is it possible to get a combined mortgage for land and self-built property? Yeah, it's pretty much treated similar to if you were just buying a standard property. You can still get 90% as a first-time buyer. The key difference there is you do need a contingency in place. Roughly, but different lenders have different contingency criteria, but typically you'd have to have 10 or 15% of contingency in the event of overruns on the self-build, which can happen quite regularly. What are the best green mortgage rates available in the market today? And which banks would you recommend? So typically, most of the main lenders have discounted rates for energy, the purchase of energy efficient properties, and actually some of them have made kind of changes to those at the moment. Typically, it's based on the BER rating of the house, so you get a certain rate, whether it's an A, B, C, or D rated house, and so on. The general rates, the best rates in the market are in around 3.45 at the moment and upwards. What I would say is speak to your broker just to see what are the best options available depending on the energy efficiency or the BER rating of the house that you're buying. Moving home from Australia, any tips for purchasing in Ireland while still in Australia? Yeah, some lenders do cater for that in terms of providing what's typically called a foreign exchange mortgage, where you're still resident outside of the country. There is 2 lenders that do have an offering in that space. Again, I would say speak to a broker just to find out what is the kind of the overall kind of process and offerings that are available in the market. Is it possible to get an AIP while still being on probation? Yes, you can get an approval in principle while you're on probation. Some lenders can it's very much kind of case by case basis depending on the lender that your application goes into. You do need to, if you do identify a property and you're moving to loan offer, you do need to be out of your probation period, and you need to evidence that. And then, is there an age limit to secure your a first-time buyer mortgage? There's no age limits. I think that the question that came in, somebody who's 42 at the moment, so there's not a limit in terms of securing your mortgage in terms of that. However, banks will typically have a ceiling age that they will borrow up to. So for instance, if a bank says they will borrow up to the age of 65 and you're 42 years of age looking to take out your first mortgage, typically the term that the maximum term that you can take is 23 years on that. So again, I would say talk to a broker to find out what options are available in the market. Some lenders do allow for higher age ceilings, but we can certainly support you in terms of that. We might just go back to the panel discussion in terms of timing, where we probably have about 5 or 6 minutes left. Gemma, I might come back to yourself. A lot of interest in terms of the supports that are available for first-time buyers. If we are using the Help to Buy scheme, is it possible to rent a home?
No, so the Help to Buy is in place. It's, I suppose, not an investment scheme. You have to live in the property for 5 years.
Okay, okay. And can the first home scheme act as a percentage of the deposit for first-time buyers?
No, so as I said, the first home scheme is more, you can look at it as, say, as a mortgage scheme, and then the Help to Buy is more your deposit scheme. You can use the Help to Buy with the first home scheme, and that's where you can get help with your deposit. But if you do want to use the Help to Buy scheme with the first home scheme, you're only eligible for up to 20% using the first home scheme.
Okay, do we obviously there was the first home scheme was extended there, I think, going back a number of months ago. There is a question in terms of when the Help to Buy in the first home scheme, when is it at the moment, when is it due to expire or end as a support?
So 2025, however, the current government at the moment is talking about extending it much past that, which is very positive. I suppose we've seen a lot of uptake this year with the first home scheme and a Help to Buy. So I suppose these policies are working. Help to Buy is working, first home scheme is working, and it's helping first time buyers get on the property ladder. And as I said, we've seen a lot of purchasers using those schemes to date.
Okay, Gemma, thanks very much. Sandra, I might just come to yourself. Seems to be a good few questions. Obviously the focus is very much around the first time buyer and the purchase of kind of new builds. But what about support for first time buyers that are looking to buy second-hand residential property?
Okay, unfortunately, I suppose that there's no support there at the moment. The only one really, I suppose, is this vacant home grant. Or the other, I suppose you've already touched on it, Shane, as well. Just if somebody's buying a property that is renovated and their BER rating is a B3, then they qualify for the green mortgage. But unfortunately, there's no other schemes for the second-hand market at the moment.
Okay, and then what's the process of building or renovating vacant properties? Is there I suppose the question is probably more around the planning permission that might be needed?
Yeah, so I suppose if it's a case that you are going to be using the vacant home grant scheme, I suppose first your first step is to find out if you actually qualify for it, and then get the approval for it. And then I suppose once you have that in place, and sorry, when you are submitting your documents, if you're doing an extension, you will be submitting any planning documents at that point. So then once you get your approval, be it the approval in principle or the full approval if you're currently owning property, then it's kind of like any other renovation where you engage with your contractor at that point. And then once the works is finished and it's all signed off on, well, then that's when you get the grant then.
Okay, thanks, Sandra. Gemma, back to yourself. How fast must you repay the first home scheme? The repayment?
So it starts in the first, it starts after 5 years, so it starts in the 6th year if you haven't bought the first home scheme out at that stage. If you refer back to the slides, it's broken it down. It's the service charge essentially that's paid on the first home scheme portion only, and it's a fixed interest, so it's a fixed for the length that you decide to use it for, which is good. So which is slightly different to obviously if you're taking out a mortgage in the rates.
Okay, very good. There's a good few questions just in terms of will this recording be available after? Yes, it will be sent out to everybody that registered. Am I eligible for first time buyer HDB scheme if my mortgage is approved for more than 500,000? So I know, Gemma, there is a lot of queries just in terms of the ceilings across the different counties. I know you've gone through that in your presentation. Maybe just want to re-summarize that maybe for that question.
Yeah, so Help to Buy is essentially 500,000 or less. So that's just the one number that you need to remember there. First home scheme is done per region. So for example, in Wicklow, it's 475 or below. As I said, if you use the Sherry Fitzgerald mortgage calculator and you say you click down on Wicklow, and if you put in, say, for example, 500, it's going to tell you you're above the first home ceiling there. But if you are unsure, especially when it comes to duplexes and things like that, contact us directly or contact the agent directly, and we'll be able to guide you there too.
Great. Gemma and Sandra, thank you very much for your insight today. I am conscious that we've gone beyond 1:40, so I am going to wrap it up there. We got over 50 questions there. I'm hoping that we managed to cover off a lot of them. There was a lot of kind of repeated questions, and I think some of the questions that came in had been covered in the earlier presentation. So I would encourage everybody to have a look at the recording if you only managed to jump on after we started. So thanks to Gemma, thanks to Sandra, and thank you to everybody who took the time to attend our first time buyer webinar today. As I said, the recording will be sent out after, as well as the slides that were presented on the day. And we'll wrap it up there. Enjoy the rest of your day, and thanks very much for joining.
Thank you. Thanks.